Welcome back to HowToDough, where I talk about today's time finance news and start a conversation with you down below in the comment section. Today, let's talk about Alibaba's second listing that they announced. That's going to be on the Hong Kong exchange. They plan on using the proceeds for their ventures, such as Almi, which is an online food delivery service, Fliggy, which offers a one-stop shop for business travel necessities, such as tickets, such as hotels, visas, and also Youku, which is a YouTube of China, along with other cloud computing services to compete with AWS or Amazon Web Services. Alibaba plans to raise about $13 billion on this new exchange, the Hong Kong exchange. The process of getting a company on a new exchange entails having major investment banks helping them to do the paperwork, to do the evaluation, basically do all the math and the logistics for the actual exchange. So for Alibaba's second listing, they're going to have China International Capital Corp, along with Credit Suisse running the show. And then they're going to have Citigroup, JP Morgan, and Morgan Stanley coordinating and book running. So they're essentially going to be in the background helping along with this deal as well. My opinions on the story: having Alibaba on a more domestic market, such as Hong Kong, will allow for retail investors in the area to show their support for the stock. Retail investors are investors that aren't banks, that aren't actual corporations trading stocks. They're more just citizens, day-to-day people. A great example of retail investors are those that use Robinhood, an app that initially started off with zero commission, and now you see a lot of millennials using the app. Those would be a great target pool for retail investors. And now when you move the Alibaba offering to a more domestic area, you're going to have a lot more retail investors people hopping on board on Alibaba in Hong Kong due to the exposure of Alibaba in that area. The best comparison will be Amazon within the US. If you look at PE ratios of Amazon and Alibaba, you see Alibaba's hovering around 21.47, pretty healthy PE ratio. And you see Amazon hovering at 77.68 for PE ratio. I'll break down what a PE ratio is right now. PE ratio is the price earnings ratio. This shows the current price of the stock divided by how much the stock actually earned. And now this is a great indicator to see if the price is overvalued or if it's undervalued or if it's sitting at a proper benchmark such as 20. So, an opinion on why Amazon's speculation is so high is that you have a more tangible item such as Amazon in the domestic area within the US. So I actually could make my bets on Amazon with more of a idea of what's going to happen opposed to Alibaba, which I have no idea what's happening on the day-to-day for Alibaba because I don't use Alibaba. Amazon, on the other hand, I hear in the news they're about to enter into the drone delivery services. They're about to enter into groceries. They're about to enter into new POS systems for their grocery stores. This is all intriguing. This is all speculation that I could bet on, and that could potentially lead to their PE ratio skyrocketing to about 77, opposed to Alibaba, where the U.S. doesn't have much of an idea what the stock could potentially be. So their PE ratio is hovering about 21%, 21 at currently. If you move that to another market, who knows what's going to happen. This can also be a great hedge for Alibaba. If the trade war does escalate and the U.S. does decide to take off Chinese-based companies from the U.S. exchanges, then Alibaba is just caught off guard. Now they have two exchanges where they're represented in. So this is a great way to make sure that no matter what's happening with the two governments, U.S. and China, that Alibaba is still going to be raising capital. And this is a big business. This hovering around about $500 billion in market capitalization. They grossed about $38.3 billion on one day. Just to put in perspective how big this company is, with the money they raised in one day, they could buy the whole company of Fitbit 22 times over. As of the time recording this, Alibaba is currently up in the pre-markets by 80 basis points, hovering about $184.30. With data regulation not in the news as much in China, I do see Alibaba as a great buy opportunity right now. I currently have stake in Alibaba right now as well. I bought it at about like 150 about 2 years ago. Not much growth, but I'm hoping for long-term effects happen. And I'm really interested to see what happens to the stock. Back to HowToDough. If you like the video, please feel free to leave a like down below, along with subscribing and leaving a comment down below. Let me know what you think about today's story about Alibaba, whether you think it's a great buy opportunity after opening an exchange in Hong Kong, where we see a lot of political despair happening, or you think Alibaba entering the Hong Kong market is a good idea. Maybe this is a good opportunity in the near future once political tensions cool down. Let me know what you guys think. Maybe you guys open my eyes up to another perspective I never thought of. And until next time, peace.